This short clip is from my live trading room. You can engage directly with my fabulous team and me at LaDucTrading.com for all our research and trades. Or for just my daily live streams, you can access via YouTube memberships. All links are in the description. Long story short, we still have a Santa rally to contend with, which I thought might come if we can bottom by Monday or Tuesday of next week. And we're not quite there yet. So it's not going to be today. Options expiration. Bank of Japan hiked as expected. So we've got some interesting divergences globally with Japan hiking, ECB pausing, Fed US cutting. Anyway, we're not getting the 10-year yield to come down and follow the short duration 3-month, 2-year, nothing like that. We still have term premia pretty bid on expectations of rising inflation and risk to bondholders. That's just making the whole system a little bit more aware that toward the end of the year, maybe toward the end of the first half, we could have an increase of the 10-year yield, which would present as a headwind to equities. But in the interim, it's really still in this quote unquote Goldilocks zone, which means it's not a threat until it can really get and stay above about, I showed you this before, but this wedge right here above let's call it 3.6, and then pushes above 4.5. And then if we were to get above 4.7, that purple line would be like, and then of course above 4.8, and Gundlach is going to get his 6%. I know, right? But not today. So anyway, this is the 10-year yield on a 2-hour, and it's just not in the way. It's just kind of choppy. And then of course we've got the dollar, which is also kind of choppy. It has a formation of a little bounce potential. And again, if it comes up, it is usually of late anyway, money stress type of situation. It's not because the economy is growing. It's actually, we've got lots of printing and lots of liquidity in the Fed for the plumbing, the flow of all the stuff that goes through it, and also lots of money still in the system from stimulus and QE. But this is not the same thing. We're talking about funding stress that is not present until the dollar picks up speed. And then we see it with a sharp pullback in equities as well as in precious metals. For the most part, it does have a look like it wants to take a little bit of a move. But remember, big picture, this thing is still on a major trend line and hasn't really fallen further. So I'll show you the dollar in a little bit, but right now we have gold. Speaking of which, we kind of are plateauing here. We're not up to the October highs, but we definitely have stayed above this kind of key level. This is the next kind of channel higher. I'm gonna have to make a new level for gold, but I still have this baseline bet that we're going sideways into the end of the year. We get above this kind of 4,400. Obviously I'm wrong, but silver in the meantime is still following the dollar yuan, and I'll show you that on a different chart. But basically it's starting to peter out as well. It's kind of a little bit of buying exhaustion into end of year. So precious metals, they've done nothing wrong on a trend time frame, but they have gone sideways. Gold miners anyway, not silver. Silver is in its own little world, as I mentioned. Oil, I'm showing you on a 2-hour, but you get the gist. As soon as we came inside and broke that, my line in the sand was 65, but we have just been resistance. Right now we're making 54, you don't know it, but 54 crude is massive support. So we'd have to really have a deflation impulse of size to hit that level. Big supply increase, but mostly global falling oil demand has still been my theme. But right now I think 54 will hold. That's the baseline for oil. 54 crude holds. 10-year is still intonating an attempt to get above 4.2. That would be a little shake and shimmy. Could start the new year, but for right now, market is still going sideways with a Santa rally vibe. You can see this beautiful rollover. Again, I'm on the Qs on a 2-hour, but you can kind of see this lovely dump. And then we had Micron, but also a suspicious CPI with lots of missing data, but market loves to be lied to. So anyway, we had the bounce on Micron, which helped support growth for a little bit yesterday. Nice outperformance. This morning, Oracle is bouncing because it's winning the TikTok deal, and Oracle bouncing on the 100 week is not a surprise. So we got our 179.55. But anyway, the point is, this is the consolidation that could turn into left shoulder, head, right shoulder on a 2-hour chart for a push higher come Santa Claus time. But for right now, it's just sandwiched. So it's not really pushing and getting above 613. It could for a little inflection and then reverse. We've got options expiration today, so it's going to be hard to get a real directional move. But we also have Epstein files released probably today, tomorrow. It's a searchable database. It's redacting victim names. Thomas Massey was out with a big long video saying how he'll be on Sunday morning to dissect what they actually delivered. Otherwise, heads will roll type of vibe, Bondi and the rest, because it's a law and it's not a subpoena. So anyway, we'll see what happens there, but there's going to be some weekend risk, long story short. And then SPY, of course, has the same kind of rollover. We got to 67.20. I really wanted to take that 6,700 tag and then a little excursion down to 6,666. I still may get it. There's no guarantee here that I'm not going to, but the longer that we stay above this kind of 67.50 level, this is SPY at 675, the more likely we're not going to get it. So we'll see what happens today. But let's go through the rest of the heat map before the market opens. This is my intermarket tell among many. And remember, this kind of excursion up and above this channel has been very nice for some short duration pullbacks. And I did expect this inverse head and shoulder to rise up, and then it got above. So now we have this kind of new formation. Anyway, you can see it. It's making lower highs, lower lows, lower highs. It's not energetic. So my bear hat is still on. Choppy to bearish. That's still what I got. On the dollar, you can see where we have on a weekly potential of this being support left shoulder is kind of double bottom. If this continues higher, that's also headwind to equities. On a daily, it's just having a little bit of stabilization, hardly follow through. And you know all the crude stuff we went through. Crude, we went through nat gas falling, spot anyway into 3.4. The crack ETF, be careful. That Valaro, PBF, MPC, Dino, all that. Anyway, we went over that several times, but more importantly, this ULSD, way oversold now, would need to get back above 2.2, let's call it 2.22, just for confirmation, to be a bounce level. And right now, it just doesn't really have any momentum. So we got a steepener that also doesn't have momentum, but it is definitely steepening, and it's above my 64 basis points. So that's what we have, a little digestion here in a bond bounce, but nothing really compelling. We have a MAG 7 ratio that's been going sideways 1, 2, 3, 4, 5, 6, 7, 8 weeks. 8 weeks. MAG 7 ratio means diffusion, distribution into other stuff. Anyway, we've got a little bit of a monthly candle start of weakness. I'll be watching that for the new year pullback, but this is the tariff pull down to the tariff terrors and then intervention. Look at that Morningstar reversal, nice 45-degree angle, and then it stops. So end of October, it stopped. It was too much of a good thing. Everyone on one side of the trade. Then we see what happened in November. This is December. We're going nowhere fast. Nowhere fast. But I'll be watching that for a rollover. I'm wrong if we get above the red. I don't think so, though. So I think we're going to have more choppiness in Q1. We have a big excursion here in the dollar yen. Why? Because they are hiking, but it's not helping. So the yen is falling and they're printing yen, which makes, right? So the yen is falling to backstop it. They print more yen and the yields are going to have to cap. And when they come in to do some capping or some more aggressive hiking, this is UETA, then we might have a little reversal of the yen carry trade. But for right now, this sucker still looks headed to 160. Remember the 160 level up here? Can't really see it, but remember this? So I still think this dollar yen has the potential to move into 160 before it hits its head where it was before in January of last year and then starts to roll over. So we're waiting for that. In the meantime, gold is right back to the October highs and silver is hot fire flames with the dollar yuan continuing its inverse relationship very strongly. Gold and silver, remember, they hate volatility. So if we get volatility of any size, they will be sold. And then yesterday we had the perfect tag of 68.07 on this gap up and then a fade right back into support. And here it is, here we are. So above 68.07 is bullish. There's nothing I can do about that. And a breakdown of 67.77 is a nice bearish impulse right back down to fill
So 67.38 area would be the breakdown. If we hit and break this 67.77, then we have a gap fill to fill lower at 67.38, let's call it. So anyway, VIX is to be watched. If it stays above 1612, it can still come back to fight another day. And you can see that NVIDIA doesn't want to break that key level. And I think it's going to be another few weeks before it does. So we're still in the grind zone. You've got the Russell 2000. I had a nice, beautiful head and shoulders on the hourly. Breadth is still expanding. It's not falling apart, etc. Hasn't rolled over. We need to hit and break 24.88 in the E-mini Russell 2000 for there to be some gnashing of teeth, and we come back down into the danger zone of drawdown potential. Drawdown potential means we would take out the 6,700 and push lower, not just 66, but we could very much head down into 6,600, 6,500. Not today, but I'm still watching for it. And then the E-mini ES futures, you can see liquidity is still a little wobbly, and we have not broken 68.02, but that's also the level to short. Otherwise, we're just in this chop. We got above 68.02 on November 25th, and we're right back to it. Like there's just no energy to move decisively higher or lower. We have a little bit of a growth rotation this morning. Oracle, TikTok deal, up 5%, that kind of thing. We'll go over a few earnings. FDX didn't really excite. Nike, of course, didn't yet. It's way early. New CEO last year just isn't helping. But we are having a little growth rotation this morning. Bitcoin doesn't look like anything. It's still in an H pattern. Still wouldn't be surprised if we head down into that 77,000 level. I keep forgetting to extend that puppy. Ethereum is also just trying to have a little bounce here. Looks like it wants to push into 3130 area, but it has no momentums to stay above, none.
Join Club today to engage with Samantha and her team of 10 experts. Scan this QR code or click the link in the description. Subscribe to LaDuc Trading YouTube channel for more live trading room recap videos and other content.